So let me introduce you to our panel. We have Donald Wells, who's the owner of Wells and Associates. He is a CPA and has been practicing in the field of accounting for over 25 years. He specializes in serving clients who are nonprofits, and his podcast with a different kind of bean counter is a hot ticket if you want to stay current with financial compliance, auditing, and tax issues. Welcome, Donald.
Thank you, Sharon.
We have also Janine Smith Hughes, who is a Columbus-based CPA, and she's the owner and founder of Simply Accounting, serving small businesses and nonprofit organizations in Central Ohio. The firm's expertise is in accounting systems and technology integration. You can contact Simplicity Accounting for assistance with QuickBooks setup, app integration, bookkeeping services, accounting systems implementation, planning and launching new companies or product lines, and also preparing packages to apply for lending or investor financing. Welcome, Janine.
Thank you, Sharon.
Okay. We also have Maurice Moe Mcgee, who is an accountant and the head QuickBooks consultant for SBC Small Business Advising. He has launched 2 of his own ventures and is a CPA candidate and has coached hundreds of startups through their planning and launch. Maurice understands and shares the importance of providing accurate financial data to businesses of all sizes. So for our session today, we will be posing to our panel some of the top questions that you as small business owners may be asking regarding your tax situation and how to prepare for filing next year. And if you do have specific questions, you can type them in the chat box and we will endeavor to address them as well. And if you need to schedule a consultation with any of our panelists for more in-depth assistance, we will post their contact information in the chat box so you can reach out to them directly, okay? Okay, so let's begin. First question. What tax changes do I need to know about? I understand that the standard mileage rate has changed. There's a change in the maximum income under the Social Security tax. So there may be others. But I will open the panel to respond to that. What tax changes do I need to know about for 2021? Don't everybody jump in at the same time.
Don, you want to start?
No.
Okay.
I can start. It's not a problem. So one of the first things that I noticed that's going to be changing, kind of changes every year. Your standard deduction for the year is going to be increasing. Of course, it's not by a large amount. I think it's 25,100, I believe, for the upcoming year. Someone can fact check me. But so you're going to get a couple more dollars. Most people, I would say, get the standard over itemizing unless you have some complex situations or some properties or things like that. So you get a couple more dollars in that regard. And then one other thing I noticed was the child tax credit. That bumped up from $2,000 to $3,600, but a lot of people received that advance payment. So you already received about $1,800 unless you opted not to receive that. So you'll get $1,800 on your tax return, but you've already received $1,800 in cash. So those are two glaring things that I've seen a lot of people with either children or just normal lifestyle activities that don't require them to itemize. Those are two very relevant changes that'll come up for the upcoming year that should hit most people's returns.
So there's one thing, Sharon, that I noticed a lot of people missed last year. And last year, there was the opportunity that if you did not itemize, to take a $300 deduction per person for charitable contributions. And a lot of people missed that because that was a new line on their tax return. And I think, and Maurice and Janine, you guys will speak to this. I think that right now we're still under the CARES Act where cash contributions don't have the same limit. That threshold, I don't know if it's still 100% or if it's 60% of AGI. Is it 100% of AGI?
For cash.
So up to, if you're an itemizer, up to 100% of AGI is deductible for charitable contributions.
Okay.
So I'm on the nonprofit side, so I know more about charitable contributions.
Okay, and AGI is
Adjusted gross income.
okay.
Yes. And it's an actual line item on your tax return. I think it's the new tax return. It used to be the bottom of page 1. I think it's still the bottom of page 1.
Okay, great. Thank you. Thank you. All right, another question. Do I have to file for my business? We've got a lot of folks that are just starting and may have just started this year. So this is a question.
Yes.
I'll take.
Go ahead.
Yes, please. Please
Thank you,
do.
you got it.
So there's a lot of, I didn't make that much. I haven't made any money yet. It doesn't matter. Just file it, because you're probably going to be better off having something on file than having nothing on file. What we learned in 2020 is it's better to have some evidence that you were doing something than to have nothing at all. So definitely, if you have revenue, tax law says you are required to file if you've got business income, even if your expenses exceed your revenue. But yes, please file, people. Let's be official, please.
Yeah.
Sharon, one of the things, I can always speak to experiences. I've got 3 people right now that are coming into my office for me to file their 20 tax return business owners, because they want some financing, they want some capital. And
Right.
the first things that's asked for is the last 3.
That's right.
And if this is one, you're either going to wait another year before you can get access to capital, or you're going to file a return so that you can get access to capital quicker. So
Absolutely.
the tax law says so. Bankers also say so.
All right.
I'll piggyback as well. Sorry, go ahead, Sharon.
Go right ahead, Maurice.
So I often see there's maybe a little bit of confusion with some business owners, especially new business owners. I had someone that brought to me a self-prepared 1065, which is a partnership return. It's a single member LLC. So most people, you don't have to file another type of tax return when you're doing your business. Usually, if you have an LLC, you're the only person that owns it. You're filing your business activities with your 1040. Certain times people think they might have to file something else. More than likely, you probably don't have a corporation. More than likely, you're in business by yourself, so you don't have other partners. There's just that Schedule C that's with your 1040, especially if it's your first time doing so. Just make sure that you know that it's all inclusive in your personal return. Even if you have a spouse or something like that, as long as you guys aren't contractually in a business together that makes it a partnership, it's probably still going to be a single member LLC. The other thing I just wanted to go ahead.
No, Sharon, I want to go down this path just because there's an easy answer to this, and most people aren't following it. Most people today, when they start a business, are starting LLCs. And then when they come to their tax preparer, they say, tax preparer say, what type of business in it? And their answer is an LLC. An LLC is not a taxable entity. It doesn't exist from a tax code standpoint. Now the question becomes, okay, well, how do I know what type of entity I have? And there's a simple answer to this. You received, at some point, you applied for an EIN number as a business owner. That EIN number, you received a piece of paper from the Internal Revenue Service. On that piece of paper, it tells you what tax form you're supposed to be filing. So as Maurice was saying, you know what, hey, it's a partnership, it's a 1065. Well, you may not have a clue what a 1065 is, but that document will say, hey, annually you're to file a form 1065. That document will tell you that. And if you can't put your hands on that, you need to start working really hard with the Internal Revenue Service to get another copy of it, which is really hard to do. Because I know I had 2 years ago, I filed a tax return for an individual that told me they were an LLC. And over the last 2 years of our relationship, I have figured out they're a C Corp.
Whoa.
That's a big difference.
Yes. Yes. And I think
Yep.
sometimes people get the semantics confused between
Yes.
a limited liability company or limited liability corporation. Typically, as an LLC, as far as state of Ohio is concerned, it is still considered a company. Am I correct? It is not a corporation? Or can it be?
Yeah, I don't know the answer to that.
Okay.
That's a legal question, and,
That's a
and
legal
my
question, right?
certificate tells me I can't answer legal questions.
Okay.
So here's the summary. Any paid tax preparer is going to ask you a set of questions to try to figure this out, right? So they're going to ask you what type of entity you are. If you don't know, they're going to tell you, go look it up. What did your EIN letter say? If you don't know, you're going to have to go find out. So if you are paying someone to prepare your taxes, they should be asking the right kinds of questions. So if you're going to a new tax preparer as a business to file for the first time, you should expect to be asked these kinds of questions and to provide evidence and documentation to back up what you're saying. If you're not, your tax preparer is probably unqualified. Go to someone else.
All right. Well said. Well said. Thank you. Thank you. So I'll skip my second question about the S corp because I think that you already have solved how they need to figure that out. Okay. So another question: do I have to report Recovery Act funds, state and local grants, etc.?
You guys take that one.
Yes.
It depends. It depends on the rules of the program where you got the funding. Generally speaking, if you got a 1099, it's taxable income. If it's a loan, the loan proceeds are never taxable income. But if it's a forgiven loan, like a PPP, we might have to show it somewhere, and it most of the time shouldn't be taxable, depending on the conditions of your forgiveness. So again, a paid tax preparer who knows what they're doing should be asking you, what are these funds? And what were the terms of them? Some of them we're real familiar with. Others, you might have got county money or urban league money, and we might not know the details of that. So we're going to ask you to go find out. But generally speaking, if you get 1099, it's taxable. And generally speaking, loan proceeds, never taxable.
Great, great. And what's typically the deadline for those forms to be sent out?
January 31st.
January 31st. So then.
So don't be in a hurry. If you've got those dollars, do not be in a hurry to run to somebody on January 5th and try and get your tax return filed, especially if you don't know the answers to those questions. Right. Because you're going to file your tax return, you're going to get money put back in your pocket, and then you're going to be angry when you have to write the check to the IRS.
All right. Yeah. Well said. Well said. So yes, definitely give time for those documents that will be coming from the various entities, perhaps that you've received funding from. Even if you have, you may be getting 1099s from folks that you contracted with. All those kinds of things. You want to get all of those documents before you file your taxes. All right. So, and so keep an eye on that mail, because a lot of times people just, they get something in the mail, they don't know what it is, and they just stick it somewhere. If it looks official, if it says, for your tax return or whatever, it's usually there's some kind of indication on that envelope that this is an official document. You want to make sure that you keep that handy for when it's time for you to file your taxes, because as Donald says, it can come back and bite you. Okay. Good.
One quick thing to add to that too, just as you're bringing in and receiving those different 1099s and those other documents, something could happen with a mailing address or email address, something like that. It's not the end of the world if you don't get it by your filing deadline. You can file for an extension because you haven't received your required documentation. If you owe, you're going to have to estimate what you owe and pay on that, of course. That's standard process. But as far as penalties and things like that for not filing on time, just ask for an extension, get yourself an extra 6 months to get those documents, but just make sure you're filing that extension on a timely basis, and moving forward you can collect your documentation hopefully within those 6 months to get it from the person that you need to get it.
Great.
You should be getting it to you on time.
So Maurice, I'm going to, and many of the people listening may know this, but I get a little edgy about this because in my first year of business, the first time I lost a client was over this topic. So people think, a lot of people think that when they file an extension, that they're filing extension for everything. What the extension is an extension to file the paperwork. It's not an extension to pay. So you have to listen really closely to what Maurice said. He said that you're going to go ahead and pay. You're going to make an estimate. And if you think you pay, you're going to write that check by the due date. And then you can extend when you actually file the return. Now, if you overpaid, when you file the return, you'll get it back. If you underpaid, you'll pay some more. So that's just how it works. It's not an extension to pay. The government does not extend the due date of a debt. They extend the due date of the paperwork to support the debt. There's a very small difference, but people struggle with it.
Great. Thank you. Let's just take a moment. We have several folks that are here on the webinar, and if you have any questions for our panel, you can go ahead and type them right now. I don't want you just to have to kind of wait till the end. If something is on your mind right now, we just want to give you a moment to go ahead and let us know so that they can respond to it. But this is good information. I hope that you're absorbing it. And also, this webinar, we are recording it, and it will be available on our MBAC University at the end. Typically by the end of the day, we're able to get it up. It's on our YouTube channel. And I will be sending you out the link, so you will have an opportunity to access this information anytime. Okay, so, okay. No questions at this time, so we'll keep on going. You guys are obviously doing a great job. This is fantastic. Okay. Okay, here's a question. As a startup, will you need an accountant or a bookkeeper? Who wants to respond to that?
Oh, you want to take that?
Sure. I would say I would consider more than likely, yes, unless you have someone on your founding team or you have someone on your executive board, depending on how you're setting up your business, that knows finance, but also knows how to account for these things. So how to file away the proper receipts, how to set up the proper vendors, how to make sure that you're booking things in a way that's actually showing the economic activity and doing so in a correct way. Those simple things can become overwhelming to a business enterprise, even when you only have 5 or so transactions if you don't know what you're doing. So there's nothing wrong with, not knowing what you're doing, but it becomes a wrong thing when you begin acting on that information and trying to, manage your enterprise, but not understanding how to book things, where to put things and things like that. The average person, I think with enough training could manage their books on an ongoing basis, but you're going to want to have some outside opinion on your books to let you know, am I doing things right? If not, having that person actually do it themselves. So it's a cost that a lot of people bark at, that I don't want to pay X amount of dollars per month or one-time setup fee, but it's worth it in gold by just having your finances and your operations and your processes in a place that is sustainable and that is correct. Those are the two things that could cost you a lot more money down the line if you don't take these considerations into account in the very beginning. But I'll pass it to the other professionals as well.
What I'll say is the technology has gotten so good, right, that there's no reason to have nothing, right? So Wave is free. You can use some version of QuickBooks that'll cost you somewhere between maybe 10, 15, and if you want to get fancy, $120 a month. If you are a spreadsheet person and you know how to do spreadsheets, do a spreadsheet. That's fine. You have to know. Don't lie to yourself and say you're a spreadsheet person if you're not a spreadsheet person. It's fine to not be a spreadsheet person, but the apps and the technology are good enough that you should be able to track it in a way, right? So there is a in between of a box of receipts and a fully prepared financial statement, and you can probably be on that continuum somewhere as a first-time business owner. There's Facebook groups, there's YouTube videos, there's the Impact University, there's probably a QuickBooks 101 class in there. So you can just like kind of look at it, see how it goes. You don't need to hire a whole professional for $500 or $600 a month or have somebody set it up for you, but you shouldn't just do nothing and manage it off of like the balance that's in your bank account, right? So if you're starting slow, you don't have a lot of revenue, you don't have the capital that you need yet, you can still do something. The biggest thing that I'll say is make all the transactions hit your business bank account, because we can always go back and put a system in place if everything hit the bank account. If it didn't, we don't know, right? So the most important thing is to consistently use your business bank account for all of the money in and all of the money out. Don't do cash. Stay out of Cash App and Venmo if you can help it. So that when it is time to hire help or get your taxes done, everything is in one place, because you'll miss stuff if not. Not the end of the world if you miss stuff, but it's better to have everything in one place than to have it all kind of separated out. But if you have the capital to pay somebody to set it up or to do it, it is a huge return on investment, because nobody wants that headache.
Okay, great. Thank you.
Sharon, Sharon,
Yes.
I'm going to take that question and I'm going to ask these two experts the question that I heard in this, because I get this a lot. And I've done a podcast on it, so I want to hear what they have to say. When do I need a bookkeeper and when do I need an accountant? Because those are two separate people with two separate billing rates. How do I know the difference, and how do I know when I need what?
I'll take that first. So bookkeeper, I think just as Janine was saying, when everything can hit your bank account, things are more cash basis. I don't want to overcomplicate it, but when things are just hitting your bank account, you have more simple transactions. So we're talking about, income in, simple type of expenses out. I think a bookkeeper would be sufficient. There's a lot of administrative and virtual assistants that can offer those types of things. But I think when you start to have assets on your books, when you start to deal with multiple partners and equity situations, when you begin to have different types of liabilities, so not so much credit cards, but different types of loans and other types of debts and things like that, it starts to become a headache, and you start dealing with things where journal entries are required and account schedules and different types of maintenance is required. And that's what justifies that higher rate that an accountant or a CPA is going to give you, as opposed to a more simpler bookkeeper. But I'll give Janine the floor now, but that's my kind of spiel on that.
Yeah, so CPAs very specifically are trained in this set of rules called generally accepted accounting principles. And when you need that is when you have a level of complexity. If you're like a hairdresser that maybe sells some products, you're not that complex. But if you've got global distribution, you've got inventory sitting in 6 warehouses, and you know what I'm saying? Okay, well, that's complex. Which inventory is mine? Which inventory belongs to my vendor? Which inventory belongs to my customer? That's complex. You need a whole CPA for that. So most of the business owners that I run into do not need a whole CPA. The reason they come to me is because I am a CPA. They know that I know a little bit about everything. You definitely need someone who at least understands the tax consequences of what you're doing. Even if it's just a bookkeeper, they need to know like stuff needs to be in the right category. Again, they should understand your business. They should ask you questions about what you're doing. You should be able to look at the reports that are produced and be able to tell the story of what happened in your business financially. So there's definitely a continuum of expertise, right? And you can start sort of, if your business is simple enough, at the bottom of that expertise, which like they said is an outsourced VA, bookkeeper type administrative person who's kind of doing data entry, and then sort of tier up as you grow and get a little bit more complex.
Great.
One thing I'll add to that discussion, as a business owner, you're in charge. And as a business owner, you define the relationship. I get a lot of questions sometimes from business owners who say, hey, Don, is it okay if I ask this of my accountant or if I ask this of my bookkeeper? You have got to take control. You have got to take charge. The greatest value, given the technology that these folks bring to you today, is the ability to sit with you, talk through the financial data. And then when you hear something in that story that doesn't jive, that's the time when you can say, hey, something's not quite right. Because if all you're getting is somebody printing reports for you, I'm not sure, because the technology is such that you can do without a body printing the reports. QuickBooks has it set up where it's just like a dating app. You can swipe left and swipe right to create reports. So make sure that as a business owner, you're in charge of the relationship and you're getting more than just reports left on your desk at the end of the week.
And often reports that you don't understand, because I've had it where several of our clients have, engaged folks that were quote unquote bookkeepers and gave them statements that they were presenting for, funding or to lenders, whatever the case may be. They couldn't speak to, what was on those papers. And then, and in some cases, the information was not accurate. I had one client who had a warehouse full of inventory that was nowhere on his statements. And so he was showing as being in a negative equity situation, sitting with a warehouse full of product that was not on his, on his statements. So one of the things that we do counsel, here at the MBAC with our clients is definitely understanding. At least you had to have some kind of understanding of what your financials are, which means you have to have dialogue with that bookkeeper or with that accountant, so that, as you said, Donald, when you're telling the story, when something doesn't jive, it's just like, okay, now what's going on here? They can ask that question and then hopefully get the right answers. And then if not, then yes, you do need to seek someone else, because it is your business. And ultimately, you are the one that's responsible. Okay, so that's good feedback. Thank you, everybody. And thank you, Kaylin, for the question. Let's see. Here's another one. I have taken a long time to launch my business, more than 5 years. It has finally morphed into what I am comfortable with. I have legitimate business expenses I would like to write off for my LLC. Should I hold off filing these expenses until I generate revenue to get a better return? Somebody said, you bet. Okay, so.
It depends.
Okay. All right.
We have no way of knowing. Somebody's got to look at that and look at the past, look at your plans for the future, look at your overall tax situation and answer that question.
Okay, great. All righty. Again, definitely having the eyes of a seasoned accountant or bookkeeper or something like that to review as to whether or not this makes sense or not.
I would definitely just recommend, especially if you're accounting for expenses over multiple years for a business that you haven't yet claimed. Just a general practice that I try to tell people is to make sure that you're applying the payments and the things that you're making in the periods that they occur. So especially if you're having situations from 5 years ago where you had these business expenses, there are ways when you talk to a professional that you can accrue and do certain things like that. But as far as just best practices, just making sure that the things that are happening in that current year, especially if it's research and development based and things like that, you're applying it in the year that it occurs. So it can get complicated and murky. I'm not going to get too much into it for this, but I would look for that. And then also, if you have usually 3 consecutive years of losses, that usually triggers the IRS to take a much closer look at your business, just to make sure that it's actually profitable and that you're running a legitimate business enterprise. So as you're considering this as well, you could have, if you wanted to enter 3 retroactive years worth of the business expenses and amend your returns, you're going to have losses for multiple periods, and that could trigger something that could require a lot of documentation and correspondence that you might not want to go into. So it's a bigger question, I think, than there is, and I commend you for sticking with your business for as long, and I hope that it continues to go through and gets to launch. But just some things you want to consider as you begin to open up that box of prior expenses.
Fantastic.
Oh, but Sharon, I appreciate the question, and it's a long haul to get ready. But where we started this 33 minutes ago was, I have a business year one. Should I file a tax return? Right. That's the first question we started with.
That is correct.
And the answer didn't have anything to do with whether you're comfortable. It didn't have anything to do with whether or not you had revenue. Didn't have anything to do with anything. So I appreciate the question, and I can appreciate the length and wanting to hold those expenses to try and figure out whether or not you're going to get a return or a better return and things of that nature. But at the end of the day, we're kind of supposed to file tax returns for every year.
There you go. Okay. Thank you for that. Let's move on. Great. Thank you again for the question, though. That's what we're here for. All right. Just a few other things before we wrap up. Which tax forms do I use? I think that's already been dealt with. What are the tax filing deadlines? Can you just update us on that, please? Because of course, everybody deals with April 15th, and obviously that's for still, I believe, for your 1040. Am I correct?
We think so.
All right. So if you are an LLC, if you are an LLC, and you're filing a Schedule C with your regular tax return, April the 15th. All right.
Yes.
Great.
315 or 415. I think most businesses that are their own separate entity itself. So your corporations, you can look this up very easily. So if you're just curious, think about what your business structure is. And one of the first questions we talked about, what is your structure in the IRS form Donald was talking about? What do you say they say you have to file? Then look up when the deadline is for that. But usually it's 315 or 415. If you do an extension, add 6 months. But those are the typical deadlines, unless something COVID happens and we have a pushback deadline.
I said we think, because Congress, they just do whatever they want because they're in charge of the tax law. Two other deadlines I want to mention, though. The first one is January 31st. We talked about 1099s and W-2s. As a business owner, if you have people that have subcontracted labor or services, including probably your accountant, probably your attorney, probably your landlord, anybody that you've been paying for their labor, you need to give them a 1099.
There you go.
By January 31st. So that's your first deadline as a business owner that you need to watch. There's all kinds of rules about it. You're probably going to need some help figuring out how to issue, in what amounts, which things are the appropriate, which people are the appropriate ones to issue to. You need some help with that. And the deadline for them to get it is January 31st. The other deadline I wanted to mention is 5/15 for nonprofits. Nonprofits are May 15 for their 990s if they're a December year end, which nonprofits is a whole thing. The third thing that I wanted to mention is, if you want your tax preparer to still like you, do not come to us on the 13th of a month where something is due on the 15th, or on the 28th if it's due on the 20th. We will be cursing you in our sleep. Please. Please at least get on the radar early, right? So what I'm telling business owners now, since I just told you the kinds of expenses that need a 1099, go through your list mentally of people who you have been paying money for things, right? And services, rent, professional services, marketing agencies, subcontracted labor. There's so many categories, attorneys, that might need a 1099. Go through now, figure out, who are these people? How much have I paid them this year? How have I paid them? Because there's different rules on that. And then you can come to someone like one of the three of us and say, what do I do with this? And we'll say, because sometimes it's easy, do this and you're done. Sometimes we'll say, oh, you need some help with that. Figure this out. Go run these other numbers. Go get this data, W-9. go get this information because you're going to need that. So go through that stuff now. Also go through your income and figure out how much money have I gotten in? What 1099s am I likely to get? That kind of stuff. Do all that now so that you can come to us the second week of January and we can get started. Don't come to us at the last minute. We want to work with you, but things will go better if we have more time and we can work on it in a collaborative fashion. Do not bring me a box of receipts on April 12th.
All right, you've been warned. Okay, let's see. So I think we have another question in the chat. If I can pull it up real quick here. Let's see here. This is what happens. Okay, yes. From Sheila Alexander, she says, can we go over new tax laws for 2021? I think we might have talked a little bit about that at the beginning of our webinar. So Sheila, if there's something specific that you wanted to ask about, you can do so. But let me ask the panel, is there anything that's on the radar for next year that we need to be looking out for as well? So Maurice.
One thing, and I might actually send this to the CPAs to get it better clarity. But section 179 deductions, essentially just the bonus depreciation. Most people are kind of aware of it, and I've seen it kind of misunderstood. Some people would send a picture of an AMG and say, I'm going to buy this. How can I? So we're not going to get too murky into it, but if the both of you could just give some information on just what that is, and it might not be here forever, but just kind of just what it is. And I think that could be helpful.
So the big way, and I'm looking up the dollar threshold right now because I was taught in school never to memorize something you can look up. Section 179 is first and foremost, you have to have assets that you're depreciating, or this has to be an asset that you're going to depreciate. And Section 179 is a threshold that allows you to write it off all in 1 year. And I'm trying to see, I don't know if anybody off the top of their head knows what the threshold is, but it used to be, I'm old, so it used to be the threshold was like $40,000. And now I think it's like $500,000 or something like that. Is that right?
There's a couple tiers, but yeah,
there's a phase out to it. Yeah, there's a phase out to it. But what 179 is that it allows you to purchase a long-term asset and to either depreciate it all in the first year, so you get to take a deduction for it all in the first year, or it allows you to take the majority of it in the first year, depending on the value of the asset, the revenue of your business, and things of that nature.
Okay. Thank you.
I did want to mention one other tax change update. This is a thing that I don't think that people realize, but in normal times, you can only deduct 50% of the money that you pay for meals. But for 2021, you can deduct 100% of that. So if you're thinking about having like a catered holiday party, you're going to get the whole benefit for that whole deduction for your staff and team. And it looks like that's going to carry all the way through 2022. This is to help restaurants get kind of recovered from COVID. So for most of my business owners, it's not a huge deduction, but for my service-based businesses who are maybe business to business, and so they're, whining and dining, for lack of a better word, a lot of clients and referral sources and vendors, this can actually be several $1,000s over the course of the year. So if you're thinking about some end of year deductions that, have benefit to you, take all your clients, vendors, your accountant to Eddie Merlot's or something, because you get a full deduction instead of a half a deduction for this year and next year.
Fantastic. I like Eddie Merlot.
And just so you know, Sharon, don't let your accountant think that they're super smart. We get a ton of information. But if you just Google 2021 tax law changes, you'll get a lot to read. Now you may say, because what I like is that someone will say, hey, Don, I read this and I need clarity on it. That's really helpful because it's the Google machine is pretty awesome.
Yes. How about that?
Also,
Yes,
it might be something that didn't change from 2020 to 2021, but you changed. So now that thing applies to you when it didn't used to apply to you. So this is another thing about having an expert who you talk to all the time who knows your business, because they can say, hey, there's this thing that is maybe existed in the tax law since 1986, but it now applies to you because, you know, whatever, right? So like section 179, maybe that never applied to you because you didn't have any depreciable assets, but you had to build out some warehouse space. So now you have some warehouse space type asset shelving or a forklift or something. Well, now that applies to you when it didn't apply to you when you were at home making candles in your garage.
How about that? Fantastic. Thank you. Let's see. Do we have any other questions? Okay. All right. Let me see. I think the final question that I had was, what information do I need to file my business tax return? Okay. And I know that both Maurice and Janine definitely are involved with QuickBooks and the technology and things like that. So if you could just kind of speak to that in general, and then also what perhaps how they can use those technologies to help get that information over to your tax preparer.
Yeah, I'll start and then I'll pass to you, Janine. I know you got some good stuff as well. So just like Don said, Google is still a very great tool. So if you search, tax intake form or tax intake needs or things like that, you'll find a wonderful list of the things that you need to be giving to your tax preparer, or that they're probably going to ask for from your W-2s, 1099s, your profit and loss and balance sheet from your business, child care types of documentation. If there's necessary documentation needed to prove any other dependents, so mortgage interest, there's a whole bunch of stuff that could be relevant to your specific needs, and it can be all over the place. But you can, for general things, you can Google and kind of see what that looks like. But a lot of that documentation, especially for small business owners, you can be able to pull from your QuickBooks. So especially making sure that you're setting up your vendors to the one point of, who should I pay a 1099 to? You can set that up when you actually enter in a vendor. So the first time that person gets paid, you can ensure you have a W-9 for them. You can make sure their legal name is in your books, not their DBA or something like that. So of course, if a person put that person's name, we can assume that person is a sole proprietor. But if it's an LLC, if it's a corporation, if it's something like that, that can give you a lot of your cheat sheet as to who are 1099 people who aren't. And QuickBooks is actually a box that you can click, and there's a report that comes out that says, 1099, who are my 1099 people? So it can do it very quickly. But just take a second and look and do that inventory of who am I paying, and what are their names? Like, what do I write out if I made a check to them or something like that? And that can give you a lot of the things that you need to pay. But really in the area of what should I be worrying about? What should be stressing me out? One, making sure that your profit and loss statement is coming to a point of completion. You know where your numbers are going to look like. So you can begin to estimate those types of things. And then also just making sure that everyone you've paid, you have those W-9s for. Nothing is worse than the W-9 chase down. You feel like you're in a high-speed chase, and it's a rough situation to get into, especially if you're not collecting that on the front end. So if we're talking about small business owners and things like that, consider those two things first. And I feel like a lot of weight will come off your shoulders if those two things are being properly addressed, or at least considered. Janine, I can pass it to you.
A couple of things. Number one, if you are in a business that does have more than one owner, there's some stuff we need to know in your partnership agreement. And so if y'all have not done an operating or partnership agreement and y'all need to file some kind of tax return that impacts more than one person, y'all gonna have to figure that out before we can file taxes, because that matters. And especially if your tax filing entity is a partnership, which if you're an LLC with more than one owner, by default, you are a partnership. It's stuff y'all got to agree on, because it goes in a tax return a certain way, and it doesn't really have like default properties. You have to tell us as a tax preparer what it is, and that needs to be documented, because later when y'all are fighting, it matters. Two, your financial statements. So if you have a bookkeeper or you're keeping things in a spreadsheet and you're good at that, great. If you don't have like a quick summary of your income and expenses, you should try to prepare that and prepare it in a way that is added up. We do not want a box of receipts and your bank statements. We don't want that. It is more helpful if you add up all of your income and add up all of your expenses by category, because then we can look at this and we can go, oh, this is likely to be a return with a loss, which means from a planning perspective, we know that you're not going to have to write a check, right? You're not going to owe a bunch of taxes. And so we can say, okay, we just need this set of stuff. Or if you've added it up and you've made $150,000, we have some more planning to do. So it's helpful if you can do that for us before you come to us for the first time. It doesn't have to be perfect, but we kind of need that ballpark. So if you go to my website, you sign up to talk to me, I'm going to ask you a bunch of questions. One of the questions is, ballpark, how much revenue did you make this year? Please know the answer to that question. $10,000, $100,000, $0, $2 million, like ballpark it for me. I don't need an exact number. And then how much profit do you have? Ballpark, right? Are you profitable? Are you making a lot of profit? If you are making a lot of profit, what are you doing with that? Are you taking it home? Are you leaving it in the business? Have you saved some for taxes? I'm going to ask all of that on the front end. So be prepared with that kind of information. If you don't have a balance sheet and a P&L, I'm going to make you do some work to try to get that created, which probably means I'm going to send you to Wave. I'm going to tell you scan all the receipts into the Wave app and put all your bank transactions in. I'm going to make you do that work because I don't know the story of your business as a new client. We got to partner on that. And then we'll come back and look at it. So be prepared to help your tax preparer understand the story of what has happened in your business. The best partnerships, you will end up frustrated if you hand a qualified tax preparer bank statements and a box of receipts. You're going to end up frustrated because it's not going to be right because they don't know the context of the story. So you want that partnership between you and your tax preparer, your financial professionals, to be an actual partnership. Look for that. Somebody who understands your business, who communicates well with you, that you feel comfortable with. Also, don't feel like you can't be vulnerable. We have seen it. We've seen it all. We've probably seen something worse than whatever you have going on. Okay. So, I tell people the example of a trucking company that thought that they were making no money. And then when I did reconcile their books, I figured out, oh, somebody's going to the liquor store every day and paying $40. Like you have somebody who's like just drinking away all of your profits every day. They didn't even know because they wasn't looking at it. Okay, I've seen it all. So be vulnerable, give us all the information, tell us the story about how you and the partner are breaking up, even though y'all thought 6 months ago this was going to be, just tell us because we need to know so we can do a good job preparing your taxes and doing your planning. Okay.
So Sharon, one thing that Janine said there is that I find business owners struggle with is to know the categories. She said, give us your expenses in categories. The easiest thing to do, in my opinion, is to either reach out and get a copy of the tax return that you're going to file, or reach out to a tax preparer and have them give you a copy. What people don't understand is that Amazon's tax returns, their categories fit into about 20. There's about 20 categories on their tax return. And what I see a lot is business owners, small business owners will come out with 100 categories. And they try to keep track of everything. You've got to be able to group these things. There's a question that I think I messed up that Tracy, I tried to reply to it. Tracy Cook asked, if I hired a CPA and they filed my taxes wrong, what is with the IRS? What is the first step I tell the IRS about? How do I tell the IRS about this? And unfortunately, you can't tell on the CPA or the attorney or the lawyer. What you end up doing is you have to file an amended return. That's the only communication that the IRS will deal with, is if you file an amended return where a new tax preparer will take the old one and show the differences in order to file it correctly. So That's that process, is to find someone to file an amended return for you. And I apologize that I wasn't able to answer that in the system. I think I just clicked the wrong button.
Excellent. Thank you. Yes, I saw that popped up, and that is great. That's good information. Okay, let's see. Maurice, I think you were responding to one of the questions, one of the sayings, when paying yourselves, should you give yourself a 1099 in a partnership?
So
Okay.
yeah, it just needs a little bit more context as to like how the pay is, but usually when you're dealing with pay, it's one of three things. It could be a loan situation, but usually it's not that, but it's usually distribution, contractor pay, if you're a qualified contractor. There's very specific definitions as to what differentiates a contractor from an employee. And then of course, if it's an employee. So if it's an employee pay and you paid yourself, $1,000 check and you took in the $1,000, you're going to, there should be some withholdings going on with that. And typically most payroll processors will account for that. If it's a distribution and you're a partnership, that's going to show up on your K-1. So just kind of seeing how you paid yourself is very important. I think the others can chime in as well. But it just depends. It depends.
Okay.
The if I can, I'll just add one thing to that, because I see it a lot with single member LLCs. Single member LLCs are not allowed to be on payroll. So
Please stop listening to the ADP people. They don't know.
Yeah. So please don't write yourself a paycheck. I mean, you can write yourself checks, you can take money, you can do everything you want to do, but please do not record it as wages or salary. It's a draw. You're taking money out of the business and it's rightfully your money. But what happens is that you'll get a single member LLC where they will also have a W-2 from the same business. And that's legally, that's a little bit of a problem. I'm a CPA, I'm not an attorney, so I'm not giving legal advice.
The other thing that I'll say about that is you paying too much in taxes, and you're also paying a fee to make that happen to something that's not even to your advantage, because in your mind, because this is what my clients tell me, well, I thought it would be easier to just get a paycheck and have the taxes taken care of. Sure, but you're costing yourself more money than is necessary. So let's not do that. Cool, thanks.
Well said, well said. Well, listen, I think that's the last of our questions so far. This has been fantastic. I am glad that our director was able to join us. We had another meeting, as I was saying, that was going on simultaneously, so he wasn't able to join us until now, but I want to introduce everyone, give him an opportunity to speak to our director, Jesse Mark.
Thanks, Sharon. Thank you, Donald, Mo, and Janine for providing the knowledge. Sorry I couldn't be on the session today, but I know that panel of rock stars is always good. So thanks for having my back while I'm having others. So that's what the teamwork does, right? So I appreciate your partnership. Look forward to continue to work with everybody. Hopefully you had a bunch of ditties, a bunch of good takeaways, which I know is jam-packed. Sharon, thanks for having my back as well. Happy holidays, everybody. For those of you that don't know me, I'm Jesse Mark. I'm the regional director for the Minority Business Assistance Center. Happy to be here. Long story short, I'm a resource to resources. Our center is a resource to resources. You have witnessed this today. And again, happy holidays to all.
Again, thank you for tuning in, and we hope to see you at our next events that will be coming up. And wishing everybody a happy holiday. Thank you, panelists. Thank you, Jesse. Have a good one.
Thanks, Sharon. Talk to you guys.